Good morning. Today is Tuesday, February 21st. Yesterday was President's Day and the markets were closed. I hope you had a nice holiday weekend. Have you heard about Secure Act 2.0? It is now law, and it happens to be the biggest retirement related legislation in over a decade. New savings and tax planning opportunities demand everyone's attention. Its rules impact 401k plans, IRAs, 529s, RMDs, and more. This Thursday, I'm going to examine this new law for our next Capital Classroom online event, and I invite you to join me. If you attend, you're going to learn things like why your 401k plans will look different in the future. We're going to look at new age requirements for taking distributions from your retirement accounts. We're going to examine the death of the stretch IRA and what it means for your family. We're going to talk about how college 529 plan funds can jumpstart retirement savings. We're going to talk about one way young professionals can save for retirement and pay student loan debt. We'll look at the importance of planning and managing your taxes. And lastly, how small businesses can benefit from starting a retirement plan. Details can be found on the events page of our website, investwithccg.com. So go check it out, tell your friends, spread the word, and RSVP today. With that, I'm going to go ahead and roll the intro, and then we'll take a closer look at what happened in the markets last week. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Growing concerns about further interest rate hikes prompted by fresh economic data reversed early week gains and left stocks mixed for the week. The Dow Jones Industrials average slipped 0.13%, while the Standard & Poor's 500 fell 0.28%. The NASDAQ Composite Index advanced 0.59% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, gained 0.52%. Stocks opened last week higher on investor hopes that a continued cooling in inflation might support a more dovish Fed. A higher than expected rise in the Consumer Price Index, or CPI, and strong retail sales in January initially did little to dent that enthusiasm, as stocks posted solid gains through Wednesday's close. But that optimism faded on Thursday as a surprising rise in producer prices and another decline in initial jobless claims triggered worries the Fed would stay the course for longer. Comments from two Fed officials supporting a more aggressive rate hike stance added to the unease, erasing much of the week's gains. Stocks ended mixed on Friday, capping a choppy week. Consumer prices climbed 0.5% in January, fueled by rising shelter costs and energy prices. The increase in the CPI was higher than the 0.1% rise in December and slightly above the consensus estimates of 0.4%. The year-over-year inflation number at 6.4% came in lower than December's 12-month rise of 6.5%, making it the seventh consecutive month of declining year-over-year inflation. January's product price report showed a surprise 0.7% increase, higher than the 0.4% rise expected by economists and the biggest jump since June. Year over year, producer prices rose 6%, a slight improvement from December's number. As always, we will keep our finger on the pulse of what's happening and will automatically make changes in your managed accounts as we feel are in your best interest. If we are not investing your life savings for you, I invite you to learn more about our personalized approach at smartmixportfolios.com. All right, that is it for this week's summary. Thank you for staying until the end today again. I've got another riddle for you. Remember, be the first person to post the correct answer down below this video, and we'll send you a gift card for coffee on us. All right, so today's riddle is, share my screen here. 4 grown men decided to play on the sidewalk for 3 hours. No one chided them for childish or immature behavior. Many appreciated the noise they made. They even went home a bit richer. What were these men doing? Again, be the first person to post the correct answer down below this video, and we'll send you a gift card for coffee on us. Congratulations to John in Eden Prairie for correctly getting our riddle last week. If you'd like the answers to previous week's riddles, you can go to our website /riddles to find those out as well. Lastly, later on today, I will be sending out our full economic update. If you're not getting this email and you would like it, you may subscribe also at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.